All right, guys, how are you doing? In today's video, I'm going to show you a simple market open strategy. I'll show you everything from start to finish, from A to Z, where to enter, where to exit, when to place your trades, and everything that you need. I don't expect you to believe me. Test it out yourself, and you'll see that this is actually a very, very nice strategy. And then you can see that trading the market open isn't too difficult. Obviously, you want to trade for the rest of the day or pre-market open, then you need some other things. However, this is just a strategy for the market open. Like I said, I don't expect you to believe me. Test it out for yourself, and you'll see that this actually does work. So let's get into it. So market open is when? Well, usually at 9:30 a.m. Not usually, always 9:30 a.m. Eastern time. So New York time, 9:30. This is where it gets interesting. All right. So what we need is, and we can just choose a random day. It doesn't really matter. Let's just go right here. Boop, boop, boop. And I will show you a lot of days so you can see that this actually works. Like I said, about 80% win rate, 1-to-1 risk to reward ratio, and then you can test it out for yourself. So 9:25, I need one more candle. There it is, 9:25. So the market is about to open up in 5 minutes, more or less. And we need two things. We need the volume profile, and we need some basic charting ideas and understanding. The volume profile shows us where we have interest in the market, okay? It shows us, for example, if you look at today's market and today's session, that the market is just selling off basically, meaning the advantage is short. You can see it. We accumulated some volume all the way up here. We broke through. We had a new range. Again, volume being accumulated. We broke through once more. And now we have some volume that's being accumulated somewhere here at this lower end of this chart. Amazing. Cool. So we now know the advantage is definitely on the short side. But what can we see? We can see something interesting. We can see that we have these huge wicks down here, these candles, meaning this low somehow got rejected. Okay, that's something that you can put into consideration. However, let's go through the strategy first, and I'll show you all the details in just a second. So for now, what we need to understand is we have the advantage short. Okay, where is liquidity most likely? Second thing that you need. Where's liquidity? Think about liquidity in a way where would most retail traders put their stop loss? If retail thinks, hey, trend is going low, meaning lower lows, lower highs, it's just short, 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 short. Everybody's going short. Where would, in this chart right here, where would retail set their stop loss? So let's say someone enters short right here, or right here, okay? The market went back up, short right here. Where do they place their stop loss? Most likely right above here, right? Or if someone got in short right here, where do they put their stop loss? Most likely somewhere here. Interesting. Okay, guys, very interesting. Now that we know that most likely here or here there are stop losses, we mark these levels. There we go. First and second. We mark those levels, and we also check in terms of the volume profile. What do we see above this level? What we like to see is low volume nodes, or in this case, a bit higher, these low volume nodes right here. So the distance, it doesn't have to be right above it. In this case, now we have a high volume node, which also act as levels of resistance. So we would like to see the market push through, very important, these low volume nodes and get a hold at these high volume nodes for now. Okay, so we now know we have levels of liquidity above the current level. What about underneath? Most likely, this is the low of the day. We have some liquidity here as well, right? Because if someone got in here, if someone got in here for a reversal trade, where is the stop loss? Or if they got in here, most likely below the low of the day. So there's a lot of liquidity here. So what usually happens at the market open is that this liquidity, either on the buy side or sell side, is getting swept. Okay, guys? Meaning we move to these levels of liquidity, we grab it, and then we turn around. Okay? So what usually happens is either we grab this liquidity here, here or here. We don't know which one will be swept. We don't know that. Sometimes both. We know in our instance now, we have an advantage to the short side. So usually I would like to see the market go above these levels here and then turn right back around. In this case though, because this low got rejected quite heavily, we could even trade this right here, meaning boop, boop, out and back in. And this will be a very fast move. So let's go into the 1 minute chart and we see what happens. All right, guys. We have this high here, we have these highs here, and we want to wait for something very specific, and you will see it with your own eyes in just about a second. Market opened up, the market sold off heavily, okay, heavily. And now you want to go into something that's called the order flow, so for example, Bookmap, and you want to see something like this. This is the current day in action. I was just very lucky that this was right here. Otherwise, I would have looked for something similar. But you want to look for something just like this, meaning stops that are being swept. Okay. Once you see this, just a move down. Just a move down. Bad auction quality. Huge bubbles. You do want to see exactly that. Look at this right here. Compared to the rest of the market, green bubbles, red bubbles, size about average. This is probably the average size of a candle if you would take a look at all of these candles together. And now we have this huge bubble right here. We have this liquidity down here. This liquidity gets swept. And then you want to see one of the following things. You want to see a change in market structure and buying coming in. Meaning, what is a change in market structure? Usually, it's going from lower lows and lower highs to higher lows and higher highs. Plus, you want to see buying coming in. So something like this. Now, in this case, the scenario might not be correct, so you don't want to enter in this case. But this is what you'd like to see somewhere down here. Once you see this, you don't go in right away. You don't. Where you enter is once the market comes back to this level, you enter for a re-entry into this high volume area. All right, guys, high volume area. This is where you want to re-enter. So let's take a look. Maybe this works, maybe this doesn't. We'll see. In this case, there you go. The market went all the way back. You can see the candle opened right here. Here we most likely had a change in market structure. Boop, boop. The market went all the way back here to the 209s. This would be your buy level. You would go in here for a long trade and you would probably hold this for, it depends a bit on your risk tolerance. The most obvious level, obviously, is the volume point of control, meaning the high volume node somewhere here. However, to be completely fair, the market just goes back and forth very quickly in the market open. So this is a matter of seconds, most likely. So you would probably get out somewhere here, or even for a fixed stop loss or take profit, or for example, 40 ticks. Okay, you have a 40 tick take profit, 40 tick stop loss, and you just get in and out as quickly as you can. And that's the entire idea. Nothing too special. Now you know that right here, you had your first win. You can see what's going on. Anything after this doesn't really matter, to be fair. It doesn't really matter. So it doesn't really matter, is the market now going above this level or not? It doesn't really matter. In this case, this would have worked out. Why? Obviously, we have some liquidity here. The market is short in general. So you could potentially, if this was too risky for you, wait for this liquidity to be swept and then go back in for a trade. But that's it, guys. So here you would have been at 101 or 2 out of 2 in terms of your trades. But we can go back because this happens all day, every day. And like I said, guys, I don't expect you guys to trust me. I expect you to test me, and you will see for yourself that this works about 80% of the time. Let's go. One more example. So what happens here? We can see the market open up at 12 a.m. right here. And then the market has just been going up, 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 up. So the advantage is clearly on the long side. And what do we see here? We can see we have the high of the day right here. So there's most likely a lot of liquidity. We can see that we have these lows here, 1, 2, 3. However, we have this low right here. And this is actually a beautiful low because this low has not been taken out. See this, guys? The market hasn't come close to this low right here. It hasn't. And also, we have a high volume node where someone most likely absorbed something right here at this level. Meaning, if the market goes below these lows right here, and then goes to this level, the 65, boop, the market could go back up. So right now, what do we want? We either want to go short here, got to be a bit careful. However, the market also has a level of resistance here at yesterday's volume point of control. So the market could shoot up and then go back down, or the market could go down and hopefully go back up. Like I said, about 80% chance of success. So we see what happens. The market will open up very soon. This is the first candle, so first minute. We can see these lows have been swept now. This one hasn't yet. We do not want to get in here just yet because this will be a bit too risky in my opinion. You can do that, however, it's quite risky. Market is still going lower right now. Boop, we are exactly below this level of liquidity. Where did the market for now stop? Exactly where I told you guys. Exactly where I told you guys. And now you would wait for the market to go back in. And there it is. Guys, this strategy, it's not too difficult. It's not too difficult. This was very obvious now. This was as picture perfect as they come. All right, guys. So I don't expect you, like I said, to believe me. Test it out for yourself. This works. We can do another day. And then let me just go like this so you don't expect me to see what happened. We can even go back one more day. So you can see it's actually random. 9:29. Perfect. So what do we see? What do we have? All right. The market is clearly short. Why? The market's just been selling off the entire day. We switch to a 5-minute candle because it's a bit easier to read in my opinion. You can see these highs and these lows a bit more clearly. And here we can see this huge, same scenario as yesterday, or as the day before. Exact same scenario. Huge levels of liquidity, mostly above here. There we go. High volume node. So the market might either take this high or this high right here. Got to be a bit cautious. I'm going to place it actually somewhere right here because these are very nearby. This is a high volume node, meaning if the market goes above this level, we could technically bounce off of here and then re-enter into this area for a short trade. Very nice position. Here we have a double low, which is nice. The market is short though, so you got to be a bit more careful. So I'm going here for now for my level. We can see that we had the previous day low right here, so there's huge liquidity down here, this low and this low. Okay, huge levels of liquidity. You could now, in case you want to be a bit more sure, go back a bit more in terms of the volume profile and see that here at this 31 level, we had that day's volume point of control. So in case the market goes below this level of liquidity here, this would be a level where the market could bounce away from and then back into our range. And that is what we'd like to see. So like I said, guys, short above here, long once it re-enters, or short once it re-enters into this area, long once it went out and back into this area. So we see this is the 30. All right, and we are open. Boop, we are out. Okay, guys. We are at this high volume node right now. And we are back in. So you will be in the trade obviously right now. So this candle opened right here, went above a bit further, now went down. It already went down. Let's see, because this could already be your profit. It could, we got to check. If you have a 40 tick stop loss or take profit, it re-entered at roughly the 92 and it went all the way down to the 84. So not really 40 ticks just yet. All right. We got to see. Now this will be a 40 tick move. And the market should technically, because we have a low volume area right here. So once it enters this level, so at the 80s, you expect the move a bit further down, which didn't happen. So you either got stopped out for a break-even trade now, because you should move at least your stop loss to break even once a certain move has been made, because you don't risk any unnecessary money, or you just get out. So for now, this would have been probably the worst example of these three. So in case the market re-enters, you can see here, so it re-enters, it bounced back a little bit, you're still in the trade, you haven't moved your stop loss, most likely to break even. Now the market went 40 ticks in your direction, you either take the profits or you move your stop loss to break even. And at this case, you would either get stopped out for a break even trade, or like I said, you would have been out for a 40 tick profit. And guys, that is the entire market open strategy. Super simple. You don't need anything specific, okay? You don't need anything. You can also, fair warning, use Bookmap to find entries all the way up here. So once you check Bookmap, meaning the market moves into your level of interest, and instead of waiting for the market to go back into this range, you could open up Bookmap and see, hey, what is going on inside these candles? What is going on right now? Are stops being fished? Do we see a change in market structure? Do we see aggressive buying or selling coming in? You can take that into consideration and improve your entries even a lot further, because there's a big difference in you getting in somewhere here or you getting in here, because the potential profit, extra profit, is another 20 or 40 ticks. And if you only trade with one contract, guys, that's $200 to $400. Easy that you can profit from extra, okay? And if you trade with 5 or 10 prop trading firm accounts, that's another $1,000 or $2,000 in daily profit just on top, because you found a better entry. Now, is this more risky? Yes, kind of. But if you know where to look for entries, and like I said, guys, I told you guys, this is where the market will most likely turn around. And it almost did. Just a few ticks, about 5 points, 6 points above my level, where I told you guys the market will turn around there. That's where it turned around. So it's not too difficult, guys. If you have any questions about the strategy, let me know. Otherwise, test it out for yourself, guys. This is super, super simple. Super simple. I want to show you one example where we have no entry. I think yesterday was actually a no entry day. So stick with me here for a second, because yesterday I couldn't trade this strategy. There we go. And I will show you why. So sometimes you either have a losing day, obviously, or you have a no trading day. And you need just a few minutes in preparation. And like I said, about a couple minutes, so 1 or 2 minutes before the market opens to prepare yourself. And then you need about 1 or 2 minutes for the actual trading. And then you're in and out. So if you can take a break from work or whatever you're doing at 9:30, there you go. So yesterday's day, this is what happened, okay? So yesterday I didn't have an entry with this market open strategy, but it was pretty straightforward. We can see a D profile, right? A D profile means we are balanced, meaning we can take either longs or shorts. We can trade in both directions. We can see that the market has just now recently been selling off a little bit, but overall balanced. Okay. So I want to look for potential entries, right? Where do we have liquidity most likely? Well, I would guess double top right here. There's some liquidity up here. And there's most likely some liquidity, obviously, down here. We have yesterday's volume point of control down here. So if the market drops below, then comes back up, we could potentially trade this. But look what happened. This is now at 9:15, so I gotta fast forward a little bit. I was a bit too. There we go. So at 9:29, my level where I wanted to enter the market already got filled. So we are now below my level of interest. We are below it. So I cannot trade this strategy anymore because technically I should now move my level of entry somewhere here. However, this is just a very recent low, meaning there's not that many stops probably yet at that level. So there's no stops that are being fished at that level. So my advantage is gone. And that's exactly why I had a no entry day yesterday. Okay. You could see, like I said, the market opened up. The market went into this area where I thought it's going to get to very soon. So I would have liked to see the market go out and then back in. So you can see here 250 to roughly 259, so not even 40 ticks. But in that case, I was just like, hey, this is not my criteria. This is not my strategy. I'm not trading this. So yesterday was a no trade day. So in case, guys, sometimes this also happens. Sometimes you just don't find an entry with this strategy. All fine, all good. And then you can see here that this would have most likely worked out. However, it's just basically what happens sometimes. So without further ado, guys, I hope you liked this video. Quick market open strategy that can hopefully make you some good profits. If you have any questions about this, about certain levels, where to enter, where to exit, how to manage this precisely, let me know in the comments on Instagram below. I linked everything there, and I'll see you guys in the next video. Bye-bye.